Last Wednesday, the cryptocurrency exchange platform Coinbase listed on the Nasdaq stock exchange in the US via a direct listing under ticker symbol COIN. This means they simply listed what shares they have instead of issuing new shares via a typical initial public offering IPO route. My name is Kieran King, and today we're going to be looking at who Coinbase is, how they make money, their direct listing on Nasdaq, and what the future may hold for the company. So let's dive in. Coinbase Global Inc. was founded in 2012 in the US by entrepreneurs Brian Armstrong and Fred Ersam. Now, I'm guessing by now you know what cryptocurrency is. If you don't, for the purposes of this video, just think of it as another form of currency, a digital currency, and you can go Google it later. Anyways, Coinbase is effectively an exchange for cryptocurrencies. Although there is one main exchange engine that it operates, there are two front-facing interfaces. There is Coinbase for the average Joe user, and then there is Coinbase Pro, a more professional trading interface for the serious traders out there. In any case, users can create an account and buy and sell crypto such as Bitcoin, Ethereum, and many others. At the time of this video, they have 50 listed supported cryptocurrencies on their platform, about 150 trading pairs, and around 56 million registered users. So how do they make money? Coinbase mainly makes money from transaction fees, which are estimated at about 0.5% per trade. The more trades you do, and particularly if you are on Coinbase Pro, this fee goes down. A small portion of their revenues also comes from selling its crypto assets to its customers. In 2020, the company did in total about 1.28 billion in revenue. Let's jump to the funding history of Coinbase. The company has seen a number of investment rounds since it was first created. To kick it off, they received $150,000 from a startup incubator program. A year later, it received two tranches of 6 million and 25 million from a number of VC firms. In 2015, a number of investment banks started to get involved, injecting another 75 million into Coinbase. Over 2016 and 2017, the company attracted a further $120 million of investment. And in 2018, the company raised a further 320 million, mainly from lead investor Tiger Global Management. And although 2019 showed a net loss of the business of circa 30 million, supported by the surge in cryptocurrency prices, it managed to turn profitable in 2020 with a net income of circa 322 million. Now this leads us nicely onto the next stage of their journey, which was their direct listing. You may have heard of an initial public offering before, or an IPO. This is where a company will create and issue new shares to the general public at a set price, and in doing so, raise a ton of cash for its operations. However, a company like Coinbase, as you have seen, achieved a net income of around 322 million in 2020. They are now profitable and not necessarily short of cash. Why would you create new shares and dilute your position if you don't have to? Instead, Coinbase decided to proceed with a direct listing instead of an IPO. This is where they simply take all the shares that are currently issued and put them on a public stock exchange, in this case the Nasdaq stock exchange. Founders and early investors can sell their holding and make an exit, and new participants can buy shares in speculation that the price may go up. Coinbase's CEO Brian Armstrong also indicated that a direct listing was more true to the ethos of crypto. In an IPO, the share price is set through working together with investment banks and IPO investors. And we can see how sometimes people get this wrong. I refer to Deliveroo's highly anticipated IPO a few weeks ago. In a direct listing, however, the price on day one is simply what people are willing to pay and is generally more indicative of its true long-term value. On the 14th of April 2021, Coinbase opened at $381 a share, shot up to around the $400 mark, dropped to around the $330 mark, and then traded sideways at that mark until the end of the week. This gives the company a circa 63 billion market cap. I want to take a step back and look at the elephant in the room when analyzing this stock. Its boosted revenues over the last year cannot be easily untied to the boosted growth in revenue of Bitcoin, the world's largest cryptocurrency at the moment. Bitcoin in 2020 went from something like 8,000 in January to 26,000 in December. It has since peaked further to around 60,000. More hype equates to more transactions, which equates to more fees for Coinbase. Now, it's anyone's bet whether this growth in Bitcoin can be sustained, but I would watch out for the invariably intrinsic link between how well Bitcoin or crypto as a whole does and the future of this company. Finally, Coinbase is not without rivals and competitors either. There are plenty of exchanges out there, such as Binance, Bitstamp, Kraken, and Gemini. More growing competition would likely put pressure on Coinbase's transaction fees, which are already higher than average. Obviously, if fees are lowered, then so is their revenue. Anyways, that's it from me for today. Thank you very much for listening. As always, if you enjoyed the content, please subscribe to my channel and smash that like button. Now, I've also included my Coinbase referral link in the description box below, which means if you sign up using that link, both you and I will receive a small allocation of Bitcoin. I think it's about £7 or something. Anyways, if you enjoyed this video and want to try out Coinbase and don't mind supporting me as a content creator, then by all means, please use that link to join. Take care, everyone. I'll see you all soon.